It is Monday, September 26th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist, with New Wave Forecasting. I'm going to start off today's R&R of the primary markets with the 10-year Treasuries. Boy, you know, if you recall last week when I was talking about how I was expecting this to play out, the basic concept was A, B wave, triangle, C, and talked about the natural dangers that bogus triangle entailed, and look what happened. So in any event, it does look like there's a strong case to be made that this fifth wave is extending, that we're going to get one more pop-up of 131.16 here, and then I think we are a terminal situation. Now, if the market is more bullish, and it is not a correction type rally as I'm currently describing it, we'll know fairly soon because the market won't come off that much, and we will perhaps not even fall back below this 131.25 level, 131.08, somewhere down in here, 04. But we should know soon. So in any event, again, looking for this market to probably roll over here on the next test of 131.16. I have to say this has turned out to be a really good call. Well, nat gas did cruise higher most of the day, which is pretty much consistent with what I was thinking here. And, you know, whether or not this is a B wave as I've been suggesting or something more bullish remains to be seen. They probably will run into some selling interests here in this vicinity of 303, give or take. It only makes sense that there ought to be some people selling it here. And then I suppose, you know, if we just kind of go sideways for a while, we'll have to see if this turns out to be perhaps a consolidation and a base. But in any event, if we get through 303, the 76% retracement's at 306.5, give or take. So that's where I think we ought to be headed here in nat gas. And you know, again, this is, as I described this scenario yesterday, this is very tough because this trend is up, but there's no way of knowing where we really are in the big picture on the counter. At least that's my appraisal of the situation. So choppy higher here, but tomorrow could be a more subdued day, perhaps trade between 297 and 305. I don't know, but not look for much tomorrow. Crude did have a pretty impressive recovery here, and now I've got it labeled in blue, which is new wave speak for sideways type of price expectation, the next sideways development. I don't know what to say. You know, as I pointed out on the intraday update, we did trade above. We hit up the 76% retracement on the push above 46. But there's just a lot of potentials on this. I don't know what to say. I suspect now we are probably going into a triangle or something else that I was not anticipating, nor I think were most players. I think a lot of people were really directional on this market, and now I got a feeling they're just going to have to take some wind out of everybody's sails and maybe just go nowhere for a while. But we'll see. This is very tough here. Only got 45.50, possible 38% retracement if the market is going to run out the top and explode, which would be the most bullish case. And the bearish case is just the market's about to collapse. So again, striving to be as reasonable as possible in most of the time. I would assume that we're going to do neither, and that would be consistent with the sideways expectations. The other thing about this RSI development here is we're a long ways up here from support. So if we do crack 45.50, then you could see how we could easily pull back below $45. And the 76% retracement down, if this does turn out to be a bona fide contracting triangle, is somewhere in the neighborhood of 44.90, 44.87.5. So that's the ideal buy spot, and you can see that's where the players who took them in last time, that's where they were waiting for them. Well, I'm not sure what we can say about the euro. I still like my scenario here. How it's going to work out remains to be seen. Again, I think the market is more likely going nowhere than anywhere. But boy, you know, it took no time at all from 112 to 113. But again, I can only stress that I don't know that there's any directional implications in any of these wave patterns here. And as we get closer to 113.30, which is the 76% retracement, I think you're going to find more selling interest. So I'd be pretty cautious if the market was to rally from here on up towards 113.30. I would be watching to see how we come off, because if we do come off say from 113.30 and then go back below 113, we would then be looking at a courtesy rally scenario. So we'll watch closely. We want to see the wave overlap before we get too bared up here or even looking at the short side. But I do think, unfortunately, this is turning out to be the end result, maybe what I want, but not at all how I thought it was going to get there. Okay, taking a quick look at gold. Boy, I'm not really sure what to make of the market. One thing I can say is that the 60-minute time frame is clearly the correct one, because the RSI resistance that I noted on the real-time update did in fact stop prices. So that tells me, if nothing else, that I'm looking at the correct time frame for the analysis. But aside from that, I don't have a whole lot more to go on. There's no wave overlap. This could still be a 1, 2, 3, 4 situation. There are a lot of things. And I got to say, whenever I start seeing these like expanding type patterns, I really start to cringe, because I just know that almost anything is possible. So, it wouldn't surprise me if we drop now towards 1335, make another nominal low, and then rally again. So this is tough. Just a trading market for now. But I honestly would rather be on the short side of this, although I can't for the life of me really tell you why. Okay, moving over to the mini NASDAQ. Boy, really not much to say here as the market continues to drift on. Well, I don't say this is a drift. This is a pretty concerted drop, I'd say, today, and come down towards the 4,800 level. And as you recall, yesterday I suggested somewhere in here between, I think, 4,815 and 4,790 would be the ideal place for this fourth wave to turn back up. So we're kind of running out of time on this, so I would call that tomorrow. If we fall back below 4,770, then that changes this whole wave pattern entirely, and we'll have to argue that somehow 5 waves up are done. So this is, I'd say tomorrow is really going to be important, but, we remember how important that 4790, 4788 level was. We remember, I think anybody who was smart enough to buy them down there also remembers, and that's what's really important here. So we'll be watching for possible for the market to, even NASDAQ to bottom wave 4 tomorrow and head back up and ideally make a new high, although probably at best a nominal new high at this point, given just how begrudgingly the market has continued to give it up. So we can only watch for some wave equality. And again, we know that wave 1 wasn't the biggest wave in the world, but it was well over 120 points. So we've still got a little extra room here on the E-mini NASDAQ, but it would certainly be best to get a reversal early in the morning tomorrow, probably after a washout of 4,800. Okay, and closing out the session with the E-mini S&P, which was pretty much just kind of chugged lower all session. Pretty much opened on the highs and closed on the lows. Certainly not a good day. Prices did come down to the 76% retracement of this last subwave. Now, I don't know if that's enough. I just don't know, because if you recall, I mentioned that the bigger 76% retracement is actually around 2115. So I am by no means ruling that out. So again, if this market does not start to come back tomorrow early with the NASDAQ, we could get hammered tomorrow. We could be down another 1%. So really an interesting situation. I do not expect prices to sit here around 2140 or actually 2138 very long. I just think this is a situation where we're either going to reject or we're going to accelerate. I don't think there's much choice here on that one. So that's pretty much it here. I'll be back with the real-time updates in the morning. So once again, this is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting, September 26th, 2016.